Hey, traders. Whoa, that's a lot of Raghee. All right, let's get the charts going. All right, there we go. Good morning. Good morning. Happy Friday, gang. Welcome to Charts and Coffee. All right, let's get to it. A lot of questions about what is happening. What is this move that we are seeing in the broader averages? What is the move we're seeing in the bond market? Has the Federal Reserve changed their tone in a way that has adjusted where we think ultimately rates are going? Because that's what sort of the end game is, right? Where do we expect rates to go? Let's start off with that. I think throughout the conversation and questions today, we'll naturally gravitate a bit to Rob. What is buy the dip, and is that a meme or is that actually a strategy? What's going on with that? So we'll definitely cover that in our time here today. Quick run through some major symbols. Number one, remember, gang, the S&P has not been in a trend since the 7th of December. We lost the trending structure that was only about 3 days old. And so really, by all intents and purposes, we haven't seen a trend in the S&P that's up since August 12th. We've been in chop, we've been in a downtrend. We tried to gain some uptrending traction, but it was very vulnerable. And if you're wondering, okay, Rog, what on earth are you looking at to even determine that? And we want to really codify it. We want to make it a repeatable methodology. And so I'm looking at this right down in here at the bottom of my charts. These are trading view charts that we're using this morning right now. The upper row is your momentum. The lower row is the trend. You can see all that yellow with a brief period of green. That's how brief the time uh, we have been in an uptrend. But it doesn't mean we've been in a downtrend either. Gang, we are firmly in chop. So sometimes the bulls are going to feel like geniuses, like here. And other times the bears are going to feel like, told you so, like what we saw yesterday, maybe at least starting today. Remember, everyone gets a chance to sort of be right in chop because ultimately the market's not going anywhere. So that's the S&P, but really, if you've been following any of the free video, you're following the content here at Charts and Coffee, the place that I'm most bullish is the relative outperforming indices and the relative outperforming sectors. That means we are looking at the Dow. And yes, the Dow is having a bit of a morning, right? But if I take a look at the structure, this is just now barely today, the 16th, options expiration. This is all the witches, right? This is all the witches. This is the futures. This is the options. This is all the different expirations. So we're seeing some downward pressure here. Buying the dip is never fun. It's never easy because it feels so much better just to go with the flow of momentum, which is to say, most traders and investors like to buy into new highs, like to short into new lows. That can be powerful and productive if done in the proper market structure. This is not that structure. So if I look at this, and the general direction of the market has been up, it's these pullbacks in the context of a trend that allow me to take advantage of a buy the dip. Gang, buy the dip is not a meme, although when applied improperly, it sort of is. But dip is synonymous with retracement. And for me, I'm looking for retracements within the context of trends. I do have that valid on the Dow. I do have that valid in healthcare, right? We do have that valid in say, as you can see right here, industrials. Now we're gonna have some weakness on the open. One of mine, and this is just mine, I want everyone to manage risk in the way that is appropriate to their experience level and their account size. But I will not exit a paper cut or predetermined losses till after the clearing. A lot of shenanigans in those first 30 minutes. I'll reassess the market. at 10. By the way, I'm going to reassess the market as we go into the close and see what kind of mood we're really going to be in as we go into the weekend. But this is options expiration Friday. So please remember, we're expecting a lot of volatility. All right. That being said, let's get to the best part of our show, of course, which is your questions. So with that being said, let me just kind of minimize these other charts out of the way. And there we go. All right. So first up is, hey there, Mimi. I'm so glad to get to join your room. Mimi, we're happy to have you. Fantastic. Thank you so much. All right. Sam, when a stock is moving lower and the propulsion dots are above the candle, am I correct in deducing that there is now more momentum to the downside? Oh, I got a question about propulsion dots in yesterday's free video. And the comment was they're kind of confusing. All right. What are propulsion dots? First of all, propulsion dots, imagine it quite literally being a dot to dot. These are the 8 by 200 propulsion. These white dots right there. Every single setting I have a specific color for. The propulsion and the layout that I share for members in the options room, futures room, and of course my sector secrets mastery are pre-programmed with my settings and my color. So when I see white dots, that's the 200. It's when the 8 exponential crosses the 200 that this even becomes something that can turn on. These dots can turn on. Where they are, this location here, is where a 200 exponential moving average would be. All right. See the green dots? That's the 8 crossing the 21. That's where the 21 would be. But you notice how they turn on and off? That's why I call these self-correcting moving averages. Moving averages are kind of full of themselves, right? They think they're always important. I believe that moving averages are really in their power band when we have a trend. So I like to have the cross of a shorter exponential moving average period, crossing a longer one, help us say, hey, there's a trend, might be on an 8 period, look back, but it's starting to show some structure. Then I want those propulsions to turn on. All right. So that being said, now that we know what they are, I'm not going to presume a moving average above price action is necessarily some sort of momentum to the downside. But you got the right idea, Sam. Let's adjust it a little bit. It's resistance. When the propulsion is above price, just like a moving average, it's resistance. When propulsion is below price, just like a moving average, it's potential support. And that's it. That's really it. Think of it as a self-correcting moving average that uses the classic moving average cross technique to validate whether or not we want to keep an eye on that level. All right. All right. Next up, can I please take a look at AMAT? Sure. For a buy the dip opportunity, green trend, part of the SMH, which has been, yeah, absolutely. David, fantastic. So do we want to buy the dip on something like SMH? So first of all, we'll see where we open. I don't know where we're sitting pre-market on SMH. Do I have the pre-market stuff? Let's see. I usually can see the pre-market values. They say post and pre-market price. Yeah. So I wonder where that's at. Anyway, I guess we can look at the 5-minute here real quick. All right. Let's see what the 5 is saying. 104. Oh, that's just a 4 o'clock close. All right. My bad. I thought I had that running. Anyway, let's see where we open. But as long as we open above 101, above even 100, even 120 in that 80-cent zone, we're still really looking at decent support within the context of a trend. That support, that validity. Oh, there it is. Right in front of my face. Was I not seeing that? Wow. Okay. So no, we're fine. Wowza. There we are, 103 and a half. Some days. So yes, we're fine on that, on a potential buy the dip. Yes, I would look for that as a potential buy the dip. Green pullback buy. And I love that you were looking at the tide as well as the boat, David. Love it. SMH is a double green, also pulling back. And 215. I don't know where we're sitting right now on this one. But yes, I really do like where we're sitting on AMAT. It would be a buy the dip. And then again, what I'm going to do is the underlying stock buy is valid in that zone for me, as would an at the money call or a slightly in the money call on that one. All right. So Mr. Walker says, no trigger, no trade. Y'all, yes. So true. No, so true. Unless price is what validates uh, why and at what price point I'm even allowed to do anything. Do I like a buy the dip in gold? Oh, yeah, absolutely. I like a buy the dip in gold. Let's do this. I'm going to bring up I just realized I did not do is I forgot to hook up my trade station right here, my trade station. So I'm not on the live futures data at the moment. So we can fix that. Jump on over to, here we go. Let's take a look at gold on the Think or Swim platform. Yeah, gold is a gorgeous buy the dip. Um, Now, one of the things that I'm going to look for is that pullback to the wave, even a pullback to the look at the dots lit up, white dots. We know what those are now. They're support, they're below price, 200 cross. That's where the 200 exponential would be. I would love the 200. I may or may not get that, Mr. Walker, but I really would like it. I really would like it. So that's something that we'll keep an eye on for sure. I like the long side. Structure says it's a go. Yeah. Okay. Awesome. All right. Question from our free trading room. Hey there, Jessica. Can I explain my Darvas box? Sure. For those of you that are not familiar with what the Darvas is in both the rooms, these are the purple and yellow lines that you notice automatically get drawn across my charts, regardless of the time frame. It's automated support and resistance. What's really even more important about this support and resistance is that what we're able to look at are where the minor high patterns are and where the minor low patterns are, which are really part of why we would end up with some sort of Darvas box, right? That's a component, that's a pattern within that formation, right? It's a required pattern, both the minor high and the minor low. So it's tracking those and it automates this box, which is automated support and resistance based on where previously you've actually seen a reaction. It's those previous highs and lows. It's those previous minor high, minor low patterns. It's those previous reactions that give us a certain amount of validity going forward as to, hey, we've reacted there before. We'll likely do that again. It's really one of the only tools that I know of that actually looks at support and resistance in this way. I'm a big fan of Nicholas Darvas. I'm a big fan of his work. And really what we've done here at Simpler is just modernize his philosophy, his approach. We've modernized the Darvas box. So this is not a classic box. In all respect to Nicholas Darvas and the fact that he was trading in the 50s and 60s, we modernized it for what we're dealing with now, 60, 70 years later. But the box idea of certain requirements before we can have that automated support and resistance is alive and well. And that's what we call the Darvas 2.0. All right. So it's automated support and resistance. But the important part is it's based on previous reactions. We can look at the psychology and say, hey, we've done this before. Pretty good chance we might do that again. All right. So I hope that helps. Next up, CMC on the daily. Love it. Uptrend. Uptrend. By the way, Bob, I love that you're looking at something that's related to corners of the market that I am very interested in. SLX, GDX, XME, metals, mining, they're looking pretty darn good. Not great, but they're looking pretty darn good. And that means it does allow us to start thinking about names like CMC and there being a path of resistance, a lower path of resistance to the upside. It's an easier, least path of resistance. There we go. To the upside. Buy the dip here. I do like the opportunity for a buy the dip. We're going to open what around 47.30. So a little bit lower inside the wave, but not below that yellow. Take a look. This is previous support right there. We're going to actually be opening above that, it looks like. We'll take a look at what we've got there. But as long as we are above the bottom line of the wave, which is the red line, I'd be pretty keen on that buy the dip on CMC. Yes. Okay, the next question. Hey there, Alex. How are you? CIO of Saxo says he has never seen a recession when we have full employment. Wondering what your take is. Alex, I appreciate the question. Happy holidays to you too. I don't give a rip about recessions. I just don't. And I definitely don't care about the CIO of Saxo. Unless, Alex, to your point, let us know what's in your book. Let us know what your positions are. How are you positioned? I don't care about opinions. I don't care about outlooks. Tell me, show me your positions. That's all I need to know, right? So, Alex, I'm going to share with you all what I'm thinking. I want to be long bonds. I want to be long gold. I want to be long euro. And some of these we are long. I want to be long staples. I want to be long. I would like to be long financials. I'm a big fan of looking at, say, long utilities, so some defensive corners of the market. I want to prioritize the Dow, industrials, transports, healthcare. That's what I'm looking at because right now it is very much a stock sector and stock pickers market as we're coming out of the chop that we've seen throughout 2022. And as we're still trying to get some bearing as to, what is it that we should be expecting for the target rate probability. The C in front of some dude's name, gang, click, I turn off. I respect retail traders. I respect people who put their money on the table. The only person who can tell me what the market can do and probably be right is Jerome Powell. So I'll tell you what, Alex, until Jerome gives us his S&P target, I don't care what some bank has to say. Yeah, I just don't. I just don't. But it does remind us of something really important, Alex, and I'm glad you brought it up. That R word is still circling around. We're still going to hear this recession word get thrown around, even though the Federal Reserve has pretty much redefined what it really is. So really, what is a recession anymore? Right? 2 or 3 years ago, we knew. Now, what does it mean? Federal Reserve basically said, nah, that's not a recession anymore. So if I don't know what it is, I can't really be concerned about it. However, psychologically speaking, every time that word rears its ugly head, yes, we're going to see fear and panic because it's sort of a knee-jerk reaction. It's Pavlov dog's reaction. However, as long as we continue to focus on what has relative performance, sometimes these headlines and the psychology is going to offer us some opportunity. And then, I was posting just the other day on my Twitter feed, and I do mean this, and I'm not saying it to be uh, funny per se, but it is true, right? Manage risk like the trade is going to lose. This is what I do. Set targets like the trade won't make a new high. Position size to be able to trade again tomorrow. I am perfectly willing to accept that where I'm looking to buy the dip could be wrong. In fact, I'm going to presume I'm going to be wrong. That way, I'm taking my risk management really seriously. I've set my allowable amount of risk based on the size of my account and the exposure that I have to a specific corner of the market. And then I just go forward knowing I don't know where price is going to go, and I'm not going to pretend like I do. I'm going to presume I'm going to be wrong and manage risk that way. And that's it. And that's it. And then, at that point, once I've taken care of risk, it's funny how then the the reward side just sort of takes care of itself, right? That's my job is to manage risk. And it's not sexy and it's not fun. I get it, right? But my job is to manage risk. And my other job is to remind myself and everyone listening, make risk management your superpower. That's how you don't blow up an account. That's how you sleep at night. And if you're ever in a position that says, Rob, this is going to keep me up, don't take it. It's just that simple. Don't take it. There'll be another trade. The market will open again tomorrow. So that's kind of the way I look at that. Because Alex, that's all that fear is balled up in that conversation, right? I'm glad you brought it up because it's something we're going to have to deal with. All right, not just this year, but going into next. All right, XLV. Hey there, Robert. Is as the XLV Tide and AbbVie look like they're ready for longs. What is my opinion on these? This would be, if we take a look at XLV, we take a look at AbbVie, as long as they're both green structure, I'm with you, my friend. Healthcare is a buy the dippable market. One of the things that yesterday, Trish and I were having a meeting about, hey, what's going to be the next topic for countdowntrader.com? And for those of you that haven't visited countdowntrader.com, it's countdowntrader.com. And we're going to talk about tendencies. Tendencies are not trades, But remember, gang, we're only about halfway through December. And that means we still have window dressing. Do you think there's a portfolio manager? I don't know. It's kind of a rhetorical question, but I ask myself, do I think there's a portfolio manager alive that doesn't want to show his um, clients that he's got a piece of healthcare? Do you think they want to short healthcare into the end of this year? Or do you think they want to put that in the portfolio to say, see, hottest sector in the market. I've got you in it. That's what window dressing is about. Now, this is on the flip side of that. The question becomes, let's take a look at, say, XLC. You think there's a portfolio manager alive that wants to justify, hey, I know Google's down. I know, say, Disney's down or whatever, but I got you in it because I think come next year, there's a lot of upside. Do you think a lot of retail traders and investors want to hear that? Or they want to hear, I've got the strength in my portfolio? Sadly, while it may be tactical oversold buys in Google that make the most sense for upside, the truth of the matter is most traders want to know what's been strong and do I have any of that, right? Not and investors. So I'm talking that retail side of the business, which is really what window dressing, Santa rallies, tax loss harvesting just emphasizes. And we're going to dive into that in the countdown trader, but strength gets stronger, weakness gets weaker. So yeah, I'm still bearish Amazon, I'm still bearish Tesla, but I'm really bullish healthcare. You got it. All right, gang. And just like that, my time is up. As always, thank you so much for being a part of our Caffeinate and Dominate show. I will see you all Sunday. I'll see you all Sunday for the Raghee report. And I will see you on Monday for our next show for Charts and Coffee. Options expiration Friday, gang. I personally do not day trade on this morning. So no AM day trading for me. I'll start looking at the market around 135 and let's see what kind of mood we are in as we go into the close. But this is a very volatile, very caution day type of a session. All right. Be good to each other. I'll talk with you soon.